How does insurance regulation actually work? And why are your home insurance rates skyrocketing in 2025? Spoiler alert, the answer is way more complicated than anyone wants it to be. Right now, homeowners across Oklahoma are facing a crisis. Insurance premiums are climbing faster than almost anywhere else in the country. The big question everyone is asking is simple. Can lawmakers actually do anything about it? Or are we all just stuck watching our rates climb while we eat ramen to afford our premiums? In 2025, Oklahoma Insurance Commissioner Glenn Mulready sat down with state legislators to answer exactly that question. Two separate interim studies, one in the House and one in the Senate, both searching for the same answers. Why are rates so incredibly high, and what power do lawmakers really have to fix this problem? What came out of those meetings might surprise you, because the answer is not as simple as just telling insurance companies to lower their prices. In fact, that approach could actually make things worse. If you want to stay updated on how these policy decisions might affect your wallet, make sure you are subscribed and hit that notification bell. First, let us understand what system Oklahoma actually uses. Oklahoma operates under what is called a file and use system. That means insurance companies file their rate changes with the state, and then they can immediately start using those new rates. The insurance commissioner does not have to approve them first. It's basically the insurance equivalent of asking for forgiveness instead of permission. Now, here is where it gets interesting. And by interesting, I mean potentially infuriating. Under current Oklahoma law, Commissioner Mulready has the authority to review rates if they are too low. Yes, you heard that right, too low. But he does not have clear statutory authority to reject rates for being too high. Why would the law be written that way? The reasoning goes back to maintaining a competitive market. If rates are too low, companies might become financially unstable and unable to pay out claims. You don't want your insurance company going bankrupt right before a tornado hits. But Senate Minority Leader Julia Kurt, a Democrat from Oklahoma City, points out the obvious problem. If the commissioner can only review rates going down but not rates going up, we are leaving a massive gap in consumer protection. It's like having a security guard who only watches the back door. Senator Bill Coleman, a Republican from Ponca City, agrees there is a problem, but he is also very concerned about unintended consequences. And this is where the California example becomes really important. California tried to cap how much insurance companies could raise rates each year. Sounds like a good idea for consumers, right? Wrong. What actually happened was that major carriers like State Farm and Allstate pulled out of the California market entirely. They said they simply could not make a profit under those restrictions. So now California homeowners have fewer choices, less competition, and ironically, the rates that are available are often higher than they would have been. Plus, many homeowners cannot find coverage at all. California basically became the cautionary tale that every other state points to when discussing insurance regulation. Senator Coleman emphasized this point during the studies. If Oklahoma tries to over-regulate and companies leave the state, the problem gets worse, not better. You need competition to keep rates reasonable, and nobody wants to be the next California. So what is the middle ground? Because clearly doing nothing isn't working, but doing too much could backfire spectacularly. Senator Kurt suggests that Oklahoma could look at what neighboring states like Texas and Kansas are doing. Both of those states also use file and use systems, but they have built in more robust review processes. They have actuaries, the math experts who calculate insurance risk, actually sit down and examine the numbers that companies submit. Right now, Oklahoma does not really do that. The law does not clearly give the insurance commissioner that authority. So rates go up, and there is no meaningful check on whether those increases are actually justified by the data. Insurance companies are using complex mathematical models to set your rates, but nobody with expertise is independently verifying whether those models are reasonable. And hey, if you are finding this valuable, drop a like to help others discover this information. Now let us talk about another problem. Insurance companies are also dropping customers entirely, and they're not exactly being generous about the timeline. Under current Oklahoma law, if an insurance company cancels your property insurance, they only have to give you 30 days notice. That is not a lot of time to shop around, compare quotes, and find new coverage. Senator Coleman proposed a straightforward fix. Extend that notification period to 60 days. That gives consumers more time to find alternatives without facing a gap in coverage. It is a small change, but it could make a real difference for families scrambling to find coverage. But let us zoom out and ask a bigger question. What actually defines a competitive market? Right now in Oklahoma, the legal definition is pretty simple. A competitive market exists if someone can get coverage. Period. It does not matter if that coverage is affordable. As long as at least one company will insure you, the market is considered competitive. Senator Kurt argues that definition is way too narrow. A truly competitive market should consider factors like affordability, transparency, and whether consumers have meaningful choices. Not just whether coverage technically exists. This gets at a fundamental tension in insurance regulation. On one hand, you want a free market where companies can price risk accurately and make a profit. On the other hand, insurance is not really optional. If you have a mortgage, you are required to have homeowners insurance. So consumers do not have the option to just not buy it. That creates a situation where the normal rules of supply and demand do not quite work the way they do for other products. You cannot choose not to have insurance if you own a home with a mortgage. So what can Oklahoma lawmakers actually do in 2025? Based on the interim studies, several options are on the table. First, they could give the Insurance Commissioner clearer authority to review rate increases, not just rate decreases. This would mean having actuaries examine the data to make sure increases are justified. Second, they could redefine what a competitive market means. Instead of just asking whether coverage exists, they could look at factors like affordability and consumer choice. Third, they could extend the notification period when companies cancel policies. 60 days instead of 30 gives consumers more breathing room. Fourth, they could improve transparency. Right now, consumers often do not know what factors are driving their rate increases. Is it because of statewide weather events? Is it because of the company's investment performance? Is it because of changes in reinsurance costs? If consumers had more information, they could make better decisions about which companies to work with. But here's the challenge. This is not a simple partisan issue. Senator Kurt is a Democrat. Senator Coleman is a Republican. They agree there is a problem, but they have different ideas about how aggressive the solution should be. Any legislation that passes will need to be bipartisan. Democrats do not have the votes to pass anything on their own. Republicans have a supermajority, so finding common ground is essential. The good news is that both sides recognize this affects everyone. High insurance rates do not care about your political party. They hit rural Republicans and urban Democrats equally hard. Senator Kurt emphasized this point. The interim study itself was a bipartisan effort. Senator Coleman was respectful and collaborative in hosting the conversation. That is a good foundation for finding solutions that can actually pass, but they also have to be careful. Overreach could drive companies out of the state. Underreach leaves consumers with no protection. Finding that balance is the real challenge. One thing that came through clearly in both studies is that consumers are often flying blind. Insurance is complicated. The policies are full of jargon. The pricing models are opaque. And when your rate goes up, you often do not get a clear explanation of why. Senator Kurt was surprised by how much she did not know, even as a state senator studying this issue. If lawmakers are surprised by the complexity, imagine how the average homeowner feels. That is why some of the proposed solutions focus on education and transparency. Not just changing the rules, but making sure consumers understand the rules that already exist. For example, do you know what replacement cost coverage means? Do you know the difference between actual cash value and replacement cost? Do you know how your deductible affects your premium? Most people do not, and that puts them at a disadvantage when shopping for coverage. So what happens next? The Oklahoma legislature will reconvene, and these issues will be front and center. Bills will be proposed. Some will focus on extending notification periods. Others will focus on giving the insurance commissioner more review authority. Still others will focus on transparency and consumer education. Not all of them will pass, but the conversation has started, and that is significant. Commissioner Mulready has been clear about the limitations of his current authority. He is not refusing to help consumers. He is saying the law does not give him the tools to do what many people want him to do. If lawmakers want him to have those tools, they need to change the law. The bottom line is this. Insurance regulation is a balancing act. You need companies to be profitable enough to stay in the market and pay claims. But you also need protections to make sure consumers are not being gouged. Oklahoma is trying to find that balance right now in 2025. And the decisions lawmakers make in the coming months will affect homeowners across the state for years to come. Thanks for watching. If you want to understand more about how policy decisions affect your everyday life, subscribe for more educational content, and I will see you in the next one.